Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, and specifically to talk about the National Wealth Fund. Because the National Wealth Fund is a really important part of what's happening with regards to the war in Ukraine, because Russia is currently making losses in terms of how much money it's actually being paid and how much money it's spending. And therefore, it's having to dip into its reserves in exactly the same way as you would need to do if you constantly overspent. You'd have to dip into your savings. And at some point, those savings could run out. And that's the concern from Russia's point of view, that their national wealth fund is a finite amount of money. And if it runs out, Russia won't have anywhere else to go. It won't be able to turn to the IMF and ask for a bailout loan because it wants to keep the war in Ukraine going. That isn't the sort of thing that the IMF likes to support. Now, Russia's assets and its national wealth fund is something that we've been talking about for the last 2.5 years, ever since Russia invaded Ukraine. And if you're familiar with this topic, you'll be aware that Russia at the time of the invasion had around $300 billion worth of assets that were held with overseas financial institutions. And those assets have subsequently been frozen. And in fact, the interest being generated by those assets is now being used to put together a bond of around $50 billion that's going to be given to Ukraine to help it in its efforts to defend itself against Russia. So the Russian assets are actually now being used against it. And obviously, Russia isn't happy about this situation. It's trying to recover that capital, but as of now, it hasn't been successful with any of its legal action. But in addition to the overseas assets, Russia also held a large amount of assets within Russia itself. And this chart shows the movement in the value of those assets over the past 3 years. And the scale on the right-hand side of this chart is shown in billions of US dollars and goes from 125 billion at the bottom to 225 billion at the top. So if we start off by looking at the situation in February 2022, which was the month that the invasion started, officially at that point, Russia was holding assets valued at $155 billion. Immediately following the invasion of Ukraine, the value of the National Wealth Fund increased. And the reason that it did that was that Russia was rapidly trying to pull back as much cash as it could from those overseas institutions. And some of the money wasn't intercepted. And as you can see, by June 2022, the National Wealth Fund had actually increased to $211 billion. However, over the course of the past 2.5 years, as a result of a combination of both the impact of the sanctions, which has reduced the amount of income that Russia has earned from its overseas sales of oil, gas, coal and other commodities, and also its heavy spending on the war in Ukraine, the total value of the National Wealth Fund has fallen, and the most recent figure for October 24 show that it's now down to $131 billion, which represents a reduction of $80 billion or around 38%. Now, Russia's National Wealth Fund is split into two different categories. Liquid assets, which are basically cash, so currencies that Russia is sitting with, and also gold, which is easily converted into cash, and non-liquid assets, which are basically things that have long-term value, but basically are very difficult to be able to convert to cash. Now, before we go on any further today, I want to talk to you about today's sponsor, Incogni. Something that drives me absolutely insane is spam marketing, whether it be spam emails or spam text messages, or the very worst of all, spam phone calls, where people phone you up and try to sell you things that you've got absolutely no interest in buying. Now, the reason why you're hit with so much spam these days is because of data brokers. And this is a huge industry now. Data brokers can take your data when you go online and register for a store card or buy something, and then they can sell your data onto hundreds of different databases. And those databases are then used to hit you with all of the spam. Now, the great news is that if you can find out which databases you're on, you can contact them and have your details deleted. But who's got time to be doing that? Well, the answer to that question is incognito. Once you sign up with them, they will contact the data brokers and ask for your data to be removed. And as well as cutting out all of those unsolicited phone calls and messages, it will also protect you from cybercrime and identity theft. And the fantastic news is that Joe Blogg's viewers can get a 60% discount on an annual plan by clicking on the link in the description below. This graph shows the movement in Russia's national wealth fund liquid assets, which is actually the most important part of Russia's national wealth fund because it can be used to fund the war in Ukraine. And what this shows is that in February 22, Russia's liquid assets were sitting at 9.75 trillion rubles, which at the exchange rate of $1 to 75 rubles at the time equated to around $130 billion. However, as you can see, over the past 2.5 years, there's been a rapid reduction in the amount of liquid assets, and the most recent figures for October 24 show that it's now down to 5.45 trillion rubles, which at the current exchange rate of $1 to 98 rubles equates to $55 billion. So over the past 2.5 years, there has been a reduction of $75 billion, or around 58%, in Russia's total liquid assets. And one really interesting thing to note about the liquid assets is that at the start of the war, the biggest single holding that Russia had was in euros. It was holding around $41 billion worth of euros. It was holding $30 billion worth of yuan and around $28 billion worth of gold. If you look at the breakdown of the liquid assets today, there are no holdings of euros because Russia is no longer doing the significant amounts of trade with Europe as it was at the start of the war. And the biggest single holding in liquid assets is now Chinese yuan, which is around $35 billion, and Russia is holding around $25 billion worth of gold. So its gold reserves have gone down slightly, and its exposure to Chinese yuan has gone up significantly. At the end of October 2024, the Bank of Russia increased the rate of interest in Russia from 19% to 21%. And at that time, it published a report which included an update to the medium-term forecast for the Russian economy. The first part of this update forecast what was going to happen to inflation in 2025, 26 and 27. And as you can see, the Bank of Russia is now forecasting that the average rate of inflation in 2025 will be somewhere between 6.1 and 6.8%, compared with the target level of 4%. In 2026, it will be between 4 and 4.2%, and in 2027, 4% on the nose. Now, interestingly, gross domestic product is forecast to increase between 3.5 and 4% in 2024, this year. However, in 2025, the growth is forecast to drop to between 0.5 and 1.5%. In 26, it will be somewhere between 1 and 2%, and in 2027, between 1.5 and 2.5%. Now, obviously, that's all really interesting information, and I may go into more detail about that in another video. However, the one thing that I wanted to pick up in this video is what the Bank of Russia said about what's happening with the National Wealth Fund. This table included in the Bank of Russia's report shows Russia's balance of payments for the 5 years between 2023 and 2027. So across the top here, we've got the current account balance. So this would be basically like your checking account balance if you were doing an annual tally. We then have the figures for Russia's revenue received from exports and how much it's paying out for imports for both goods and services, the liabilities that the Russian state is incurring, the net acquisition of financial assets, net errors and omissions, and then the key issue that I really want to have a look at right now is the change in reserve assets. So basically, this tells us how much Russia is having to take out of its national wealth fund to make up the balance of all of its spending. And what this shows is that in 2023, Russia officially drew down $10 billion from its national wealth fund. And in 2024, it's estimated that Russia will have to draw down a further $14 billion. So across the 2 years, we've got a total drawdown of $24 billion. Now, in terms of trying to marry up whether or not that figure balances to the numbers that we've just looked at, let's have another look at the movement in the National Wealth Fund. As we discussed earlier, in June 2022, the National Wealth Fund was sitting at $211 billion, and the most recent figures show that it's now fallen to $131 billion. So that's a net fall of $80 billion. So you may be sitting there wondering how I'm going to balance up the $80 million fall that's showing on the National Wealth Fund assets against the $24 billion that the Russian central bank has published. But the key difference that we need to take into account is what's been happening with the value of the Russian ruble. This chart shows the exchange rate between the US dollar and the Russian ruble over the past 5 years. And if we have a look at what the exchange rate was in June, which was when the National Wealth Fund was showing as a balance of $211 billion, you can see that at that point, the Russian central bank was heavily supporting the value of the ruble. And at the end of June 2022, one US dollar was trading for 51 rubles. And that was actually the strongest rate that the ruble had traded at any point in the previous 7 years. Now, if you look at what's happened to the value of the ruble over the past 2.5 years, you can see that there has been a complete crash in the value of the ruble. And today, one US dollar is trading for more than 104 Russian rubles. And if you take the National Wealth Fund figure of $211 billion back in June 2022, when the exchange rate was $1 to 51 rubles, and adjust it for today's exchange rate of more than 104 rubles, the fall in the value of the ruble reduces the US dollar equivalent number from $211 billion to $103 billion, which means that the fall in the value of the ruble has more than half the international purchasing power of those rubles. And as I've talked about in many other videos, the ruble hasn't just fallen against the dollar, it's fallen in exactly the same way against the Chinese yuan, the Indian rupee, and all of the other currencies in the world. So this has been an across-the-board reduction in the purchasing power of the ruble. So what's the summary and conclusion today? Well, I wanted to post this video because I think the value of the National Wealth Fund is something that a lot of you are interested in. I'm certainly interested in it because this is the pot that's keeping everything afloat in Russia. They can carry on making losses on an annual basis as long as they can fund them from their liquid assets. But the danger is, as with any of these situations, if you're constantly drawing on your savings, if you're spending more than you're earning, at some point that savings pot could run out. And when you get to that point, then technically you could be bankrupt if you're continuing to spend more than you're earning. And this is the danger from Russia's point of view. And what we've seen in today's video is that over the past 2.5 years, there has been a dramatic fall in the value of the National Wealth Fund. Russia lost access to all of its overseas assets, and that was more than half of its total assets. It was sitting with lots of foreign currency, with lots of financial institutions, because it was doing a huge amount of trade. And it didn't want to keep repatriating all of that money back to Russia because it was doing things with that capital. It was using euros and dollars and British pounds to buy things. So this worked well in an international market. But what's happened over the past 2.5 years is that Russia is no longer playing in those international markets. And so it hasn't been able to use its capital because it's been frozen. And as I said earlier in the video, that capital is now being used to put together a bond to give to Ukraine to help it in its defense against Russia. So Russia's capital is actually now working against it technically. But what we've seen in today's video in terms of the National Wealth Fund itself is that there has been a huge fall in the fund over the last 2 years or so, around 40%. But the situation is actually worse than that because as the value of the ruble falls, all of the revenue that Russia is generating in rubles as it's building up its wealth in its own currency, that's becoming worth less in the international markets. So the overall summary of today's video is that over the past 2.5 years, Russia has been drawing down on its reserves. It's been dipping into its National Wealth Fund. The Bank of Russia has confirmed that. It's shown that Russia is spending more than it's earning. However, in addition to the drawdowns on the fund itself, the fall in the value of the ruble is also hurting Russia. And if Russia continues spending at the rate that it is right now, at some point, the National Wealth Fund will run out. It won't be able to keep funding all of the war in Ukraine from its reserves. And that represents a major concern from Russia's point of view and also a huge risk to the Russian economy. So hopefully you've enjoyed today's video. You found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. And here's something to put a smile on your face.